Today's Tuesday tax tip has to do with cost basis. In a previous video, I covered capital gains transactions and tax rates and such, and never really went into cost basis. I just didn't have the time to do so. So I wanted to go over that now. Cost basis is important because that's the number we use to determine gain or loss. So in other words, I take the sales price of, let's use a security in this instance. We take the sales price of a security minus its cost basis to come up with the gain or loss. So let's say I buy a security. I buy 100 shares of stock at $10 a piece, which is $1,000, and let's say there's a $30 sales commission. That would give me a cost basis of $1,030. If I sell that security for $2,000, I have a $970 gain. If I sell it for $900, I have a $130 loss. That's pretty simple. Now, what happens if I gift those securities to somebody? If I gift those to somebody and at the time the fair market value of those securities are greater than or equal to the amount I paid for the securities, what happens is the person I give them to gets the carryover basis, meaning they use the same basis I have, the same $1,030. If the securities have a fair market value less than what I paid, so let's say it's $800, the situation's a little different. What happens is if the securities go up in value and the individual winds up selling the securities at an amount greater to or equal than 1,030, they get to use the 1,030 as their cost basis. If they sell it at a loss, they would have to use the $800 as their cost basis. And if they sell it for anything in between the 800 and the 1,030, there is no gain or loss. There are two other items I wanted to discuss as far as cost basis. Inherited securities. If you inherit securities from a deceased person, obviously, generally what is used is the fair market value at the date of death, or in some instances it might be alternative valuation date, which could be 6 months afterwards. And then lastly is dividend reinvestment. If you have a security that has automatic dividend reinvestment, let's say we go back to my $1,030 of securities, but let's say now for the next 3 years I pick up dividend income of $50 each year and I pay income tax on it. That gets added to my cost basis. So if I were to go to sell the shares, which would now be a few more shares because I would have purchased a few more with the dividend reinvestment, my cost basis would be $1,030 plus the $150 in dividends. So my cost basis is now $1,180. Hope this tip helps you out, and I'll see you again next week.